Hi folks, I'll be talking about excess credit carryover today. If foreign tax credits exceed the limitation in a given taxable year, these can be carried back 1 year and forward up to 10 years. Excess credits on general limitation income can offset only past or future excess limitations on general limitation income. Foreign tax credits can also be used to offset the alternative minimum tax AMT. AMT Foreign tax credit is computed in the same manner as credit for regular tax purposes with one exception. For regular tax purposes, the limitation equals the pre-credit US tax multiplied by the ratio of foreign source taxable income to worldwide taxable income, with separate limitations computed for passive category income and general category income. Same basic formula and separate income limitations apply for AMT purposes, except that the pre-credit US tax amount is now the tentative minimum tax before any foreign tax credits, and the foreign source and worldwide income amounts are computed on the basis of alternative minimum taxable income. Taxpayers have a choice to use simplified AMT foreign tax credit limitation when calculating their AMT foreign tax credit. Election to do so is made in the taxpayer's first tax year for which the taxpayer claims an AMT foreign tax credit. It then applies to all subsequent tax years. It is only revocable with the consent of IRS. Let's talk about deemed foreign tax credit, gross income. If a domestic corporation receives dividends from a foreign corporation, it cannot claim dividend received deduction even if it owns the foreign corporation. Dividends received will be included in the total taxable income of the domestic corporation. If United States has already taxed the earnings of a subsidiary corporation, the dividends received by such corporation will not be taxable to domestic corporation. A domestic corporation that owns 10% or more of a foreign corporation can claim dividend received deduction for the portion of dividends attributable to income derived by the foreign corporation from either the conduct of U.S. trade or business or dividends received from an 80% or more owned domestic corporation. Direct foreign tax credit. Under Code Section 903, a U.S. person can claim a direct foreign tax credit for any foreign withholding taxes it incurs on a dividend from a foreign corporation. Deemed paid foreign tax credit. Under Code Section 902, a domestic corporation can also claim a deemed paid foreign tax credit if it owns 10% or more of the voting stock of the foreign corporation from which it receives a dividend distribution. Gross up for deemed paid foreign taxes. To prevent a double tax benefit in the form of both an implicit deduction and a deemed paid credit with respect to the same foreign income taxes, a domestic corporation must gross up its dividend income by the amount of the deemed paid credit. The taxpayer must report an amount of income, dividend plus Code Section 78 gross up, equal to the foreign corporation's pre-tax earnings related to the dividend distribution. This gross up requirement prevents the double tax benefit by eliminating the implicit deduction. I'm giving you two links here, folks. Below is a video link to IRS website that educates you about foreign tax credit. So this is the link. You may right click on it and open the link. And here below is another text link to IRS website that explains what foreign taxes qualify for foreign tax credits. So you can also highlight this, just highlight it, and right click and choose open link, and it will take you to the site. Folks, all this lecture is for educational purposes only. It does not constitute any legal advice or opinion, so please do not use any of its contents without seeking a professional advice. My research comes from the book Practical Guide to US Taxation of International Transaction, ninth edition, written by Robert J. Missy Jr. and Michael S. Shadewald. Publishers are Walter Kluwer, CCH Incorporated. My name is Mansoor Sohail. I'm an accountant operating out of Toronto, Ontario, and my specializations are tax for Canada and USA. You may visit my website at www.theaccountingandtax.com or www.taxservicesguru.com. And here is the link to my blog that you may highlight and right click and open the link in a new window. And my telephone number is 416 283 8774. Thank you for listening.